Hello and welcome to another update video about the DXY. So let's zoom out first and talk about the bigger picture on the DXY chart. You can see here the price action since this or from this September 22 high. This is completely unchanged. This hasn't actually changed since the September 22 high. Yeah, when we started to cover this downturn, at the time we assumed that a more substantial top was in place here. We were tracking 5 waves down. After a 5-wave move to the downside, you're normally looking for a 3-wave correction. That happened. It wasn't really a rally. It was more like a sideways correction, which this pattern suggests anyway, because it's a flat structure, a so-called expanded flat, in which we had an overshooting B wave to the downside, a C wave rally higher, but then this was basically just overall an A wave to the downside between September 22 and the February 22 lows, then a B wave rally, and we're now likely in this C wave down. So far, it's adhering nicely to our wave count. It's cooperating very well with the ideas that we've talked about here in recent videos. Also, the 5-wave move to the downside has materialized, which I count as wave 1 of wave C. The C wave is a 5-wave move and should ideally take us into the low $90 region over the coming weeks and months, rather months. And we're currently watching if the wave 2 has topped. That's the main question at the moment. That's what it's really about. Especially as long as we are in resistance or below at least the $105.88 level, which is the upper boundary line of the resistance area, which is relevant for this wave 2 corrective rally. As long as we stay below that level, the roadmap remains unchanged. Okay, so basically what it tells us is as long as the parameters are being respected and are adhered to, there is no change to the wave count. There's no change to the chart behavior. But what it tells us as well is that a break above $105.88 will likely lead to a change, or it will at least give us an indication that the chart's behavior has changed, yeah, and that this would be a little bit too much of a rally for a wave 2. So therefore, we would then need to look at something more bullish, okay, like a bullish alternative. Maybe the only one I really have is a high B wave, that this is going to extend a little higher. The B wave still has plenty of space if it needs to, but that's not the expectation at the moment, because we had 5 waves down. Not the cleanest, but I can justify a 5-wave move down, and as long as the rally remains corrective, and as long as the rally remains below the 78.6 Fib level, further downside in a 3rd wave is expected. Okay, so that's sort of basically the main thesis here. Downside will be further confirmed. I mean, that the 3rd wave has indeed started will be further confirmed here when we look at the bigger picture, with a break below $100.60, and then even further confirmed with a break below $99.60, which is the July 2023 low. Let's go to the 1-hour chart. Let's try to decipher what's going on here. My idea about this rally is that this was an ABC structure and the B wave is a triangle. There are other interpretations, to be honest. Maybe I'll change it just now here in the video, because the way this looks now is that the B wave did sit here, and then I've got an A wave, a B wave, and then here a 1-2 setup, possibly 3, 4, 5 in wave C. So what that means is basically I can count the B wave complete. Does that mean I want to call a top in place? Absolutely not. It's too early for that. It's way too early. It really depends on what happens here now. So I would probably call a top in place for wave 2 if we see a break below $102.77. It will depend to a degree on how the break occurs of that level. But what I can see is from this high, an initial break of previous support, also Fibonacci support that we had, even though that has to be adjusted. But yeah, it broke the Fibonacci support. As a first indication, things might go down. This is a potential 5-wave move down, 3-wave rally. And as long as it stays below the last swing high, which is at $103.83, breaks below the last low, I will assume that the wave 2 has topped. What can, something that can always happen is the following. A, B, C, all good. in a larger A wave, however, will do a B wave and a C wave. So if the next move down, despite breaking the micro support levels, if that remains a 3-wave move, it's likely just a B wave and we get a larger C wave rally. That would not threaten or challenge really our overall assumption of the low $90 region for the DXY in the coming months. It would literally just, challenge it maybe a little bit, but it wouldn't invalidate it or change probability significantly, because this resistance area, I mean, the DXY can easily withstand a further rally towards the next resistance levels, for example, $104.75 or $105.88. So I cannot rule that out. At the moment, zoomed out, we're still making higher highs, higher lows. So there is no downtrend yet. Yeah, on the smaller time frame, I see a little bit of action there, and it's moved into resistance, to be honest. But at this time, it's too early to call a top in place. Also, if we measure the Fibonacci extensions as a potential target for wave C, it actually points towards the 100% extension at 104.46. So we'll leave the door open for now, but if the break below the last swing low occurs and the structure is right, it's probably topped. That's sort of how I would see this. That's my update about DXY. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates, video updates about the S&P 500, as well as regular updates about stocks like Tesla, PayPal, Nvidia, AMD, check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.